Welcome, everybody. My name is Peter Matza. I'm the former engagement director of the Association of Corporate Treasurers, and it's my pleasure to host for you today the GTR UK Business Leaders Roundtable, a series of conversations with UK business leaders about current circumstances in world trade, UK trade, and all related issues. It's my pleasure to introduce to you initially Mcclarkin, the CEO of the British Pub and Beer Association, and Philip Bouverat, who's the Director, Global External Affairs for JCB. We'll be talking about a range of issues affecting British business, both domestically and internationally, their responses to COVID, to Brexit, and a range of other issues. I'm going to start by asking Emma how she thinks her association's members have responded during the COVID crisis and where they think they are at the moment.
Well, it is a difficult time for the beer and the pub sector and for broader hospitality for sure. The pandemic has been devastating for us, and we are one of the first and hardest impacted when you think about it, the first to close, one of the last to open, and now we are seeing a situation in the United Kingdom where we are currently under several tiers of restrictions with threats of regional, local lockdowns. And so it's a bit of a checkerboard effect at the moment as to understanding what's happening and what conditions we're actually operating under. That is the hardest part of this. It's really testing the resilience of our members and their businesses, and particularly about how you can plan for this. There is so much uncertainty. There's so many variations on how it impacts on the operations, be it from the curfew that we have in place to the rule of six to no household mixing. It all really neuters and impacts on that business model, which directly impacts on trade and makes it extremely difficult to be planning further ahead when we don't really know how we're going to be going, particularly in this colder, darker winter months that are coming and impacting on us now. So it is an extremely difficult climate for those in hospitality to be trying to plan at all.
We've seen over the past few years some decline, certainly in the retail pub sector, but interestingly, tremendous growth in craft beer sales, particularly through digital channels. Even the supermarkets have responded through their local initiatives. Are you seeing a balance between those two, or are you seeing your members having to learn to innovate and learn to change their business models?
Well, we definitely had a thriving pub sector, but also a thriving brewing sector in the United Kingdom, with a lot of innovation, a lot of new beers coming through, lots of different taste palettes and new consumers, which was all very exciting. But equally as impacted as the pubs closing their doors is the taps being turned off for our brewers, and they've faced enormous challenge with very little financial support actually from the government to see them through this period of time. So there were very exciting opportunities ahead that we are a little bit uncertain of now, because as we say, we've all had to look at our businesses, pare them down, streamline them down. Therefore, are they going to be able to be ramped up quickly to take advantage of new opportunities that may be coming post-Brexit in terms of exporting, for example? So it is a difficult moment to judge, because most people are actually worrying about survivability at this moment in time. But there was a great potential going into this crisis, and we hope that there will still be great demand for our products and our great pubs when we come out the other side of this as well.
Thank you for the moment, Emma. Philip, if I may turn to you, JCB, of course, is a household name. It's a global multinational manufacturing in various locations and geographies. Has that brought additional problems because of the timescales of the impact of COVID in different geographies? I'm thinking of places like China or the UK, Europe, the United States, and so on, that you've had to adapt to differently, perhaps, than if you were a much more UK-focused organisation?
Thank you for that question, Peter. There's lots of answers to it, but let me first explain that we are a company that has 23 plants around the world. 11 of them are in the United Kingdom, and then we have plants in China, India, Brazil, and the United States. So if you look at the COVID situation first, it was almost like a sort of rolling tsunami. It started with our Shanghai factory being closed down by the Chinese government, and the supply chains that we were pulling out of that factory and the surrounding suppliers were then delayed coming back to some of our other factories around the world. So we saw this very, very early on. And I remember speaking to one of my colleagues, and he said, you know, if this continues and actually escapes China, because at the point it wasn't a pandemic, if it escapes China, it's going to roll towards the West. And sure enough, it did. It rolled through China, it rolled through our supply chains in India, our manufacturing in India, and then on into Europe, hitting Spain, France, and Germany particularly hard, and then the UK. It took longer for that sort of roll to go across the Atlantic, but it then started to affect our Brazilian operation. So we saw it sort of roll across. And I think it's probably worth pointing out at this point, when you build a machine, it's a yellow machine with wheels or tracks or whatever that does a job, but it has many thousands of components. And those many thousands of components come from many hundreds of suppliers in many tens, if not hundreds of markets. So you can't sell a jigsaw if the corner piece is missing. It's as simple as that. So we had to look at our supply chains, which were becoming very haphazard. By about 4 or 5 weeks in, they were coming in at different levels. Some factories were closed, some were still open, some were on reduced amounts, but they didn't all come in at the same time for us to do our just-in-time manufacturing. So ultimately, our manufacturing in the UK, let's talk about the UK mainly. Our manufacturing in the UK had to shut down entirely for a period. But having said that, we were not instructed to shut down by our government. We fell into the category of supplying essential services to utility companies, the MOD, the National Health Service, and of course, agriculture. A lot of people don't realize that 17% of machines that we manufacture as a company globally are used in agriculture. So that kept us going. We also, in the UK, did not stop our service departments. We kept all the service vans on the road because we saw a push very early on from our government here that they would start spending on infrastructure. We saw the release of HS2 very early on during the crisis. And we also saw pledges for the Highways Agency to start building roads. And of course, the guys that were on frameworks for mending damaged roads were clapping their hands because there was no traffic, therefore they could be much more efficient. And they kept working. If you take Mike Conway, who some of you will know, you'll see his equipment all over central London. He has what's called a framework on Westminster for not only new bicycle lanes and pavements, but also to repair roads. Therefore, he just got everybody working, repairing as fast as possible, and was probably saving money on the lack of traffic management and certainly not losing time due to congestion. So that was an interesting sort of byproduct. I think I'll sort of stop there for a moment, unless you want me to carry on, but that's where we found ourselves.
I'd just like to pursue briefly. It's very interesting you mention sort of the time lags between different markets. We know that because of that, some markets, China, for example, perhaps other Asian markets, may well come out of this COVID crisis from an economic perspective, at least, ahead of those in the West. Does that present challenges for you, perhaps going back the other way in terms of being able to work your supply chains, manage demand from those marketplaces, both manufacturing within China, but also supplying perhaps other Asian markets?
That's a very good question, quite a complex question, because when you have a global supply chain, you tend to look at maps of the world almost mentally and saying, you know, what's working, what isn't at the moment. So to answer your first question, yes, China will come out of this first because it went into it first, but also it's extremely good at being very prescriptive with its companies and its people about what they will be doing next. So you see this morning, the IMF prediction was right that China would be the only country with a positive growth rate this year. I can't remember the figure the BBC quoted it this morning, but it is coming out of this very, very fast. we obviously manufacture in China as a company, and our supply chains are now up and running, so they're feeding our other factories now. So that's good news. But we don't regard Chinese manufacturers impacting us particularly. We work in a very large, complex global market, and when the sun's rising somewhere, it's setting somewhere else every day, and there are opportunities that follow that process.
Do you feel that your industry sector, perhaps taking a slightly wider view, just away from JCB, has responded positively to these changes, or do you feel there's still a certain element of business continuity plans perhaps not kicking in as might have been hoped?
I mean, our sector, the equipment manufacturing sector, has tried to pull its supply chains together as quickly as possible and crack on, because most countries around the world are dedicated to building infrastructure. There's no doubt that good infrastructure equals prosperity. It's as simple as that. If there is any situation that is slightly different to that, you look at it where perhaps the machines that are manufactured are being used on roads and things are very straightforward, but when it's on more complex things such as houses or high-rise blocks or this kind of thing, there is, in a recession period, there's always a bit of a pullback. I can give you an example. Our machines are tracked through a global positioning satellite piece of software, and it tells us where they are and where they're being turned on or off, or whether they need servicing. At the beginning of the crisis, I'm talking about the UK at the moment. Other countries had different models, but the UK, we saw a very sharp drop. But not only did we see a sharp drop, we could actually work out where it was dropping and why, and then as it picked up. And we knew there was a problem storing up in house building in the UK around about May, because the supply chains had been told to stop working. So the brick companies, the quarrying companies, whatever, had stopped. They hadn't really listened to what the government was telling them. They should have kept going to a certain extent under PHA guidelines. So what actually happened, the house builders started finishing what they'd started, but they weren't starting anything new. And we knew that very early on, because we could see equipment that was lifting things and placing things were getting more and more active every day throughout April, May, June. They were going up like that. But the excavators, the ones that dig the big foundations and prepare the ground, were all coming off higher and going down. So it was telling us that the house builders are going to have a great sort of flurry of finished units to sell, but then the whole thing's going to fall off a cliff because nobody's starting anything. So I'm very pleased to say that our Chancellor did know about this, did understand it. Also, Michael Gove was very switched on to it, as were Bay's department, and particularly Nadeem Zahawi, were totally aware of this. But what made them more aware than anything was the data coming off literally machines that weren't being used, or different machines. So with all government lobbying, you have to prove something. You can say, I've got this great idea, but they say, well, can you prove what will work? So we could show them these graphs, and it was just so obvious. So the stamp, I'm not saying we were totally responsible for the stamp duty thing, but we put our data into it, and the Chancellor, in his wisdom, correctly said, if we drop stamp duty, it's going to accelerate the house market, which it did. And then we saw the excavators going back to work and digging trenches. It was quite extraordinary. So I won't call that smart or intelligent or anything else. It was just using data in the right way and informing people what was happening literally on the ground.
Well, I think we can call it smart and intelligent in terms of the technology that's being deployed. Emma, if thank you very much for the moment, Philip. Emma, if I can come back to you, it's quite interesting. Perhaps if I can make a contrast, and you can put me right on this, between sort of the large-scale manufacturers that Philip is talking about there, and your members who range in size and scale. Do you think the impacts on your members has been more varied because of that size and scale issue, or has there been, if you like, a consistent response in terms of business continuity?
Well, we're having to navigate definitely the same challenges, but depending on your size or scale, actually just your financial status going into this crisis is dictating really how you can come out of it. So those that have owned their freehold estate are in a much better shape than those that had an awful lot of rents and mortgages to pay. You know, those are the situations that we find ourselves in. Kind of had a major impact on sort of initial survivability of businesses. And we've done research and modelling that we will lose pubs, and unfortunately there will be job losses for the sector. And we're desperately trying to stave off both of those things. Nobody wants to see any reduction in personnel or assets. That's the whole point of a continuity plan. But it is becoming extremely difficult to see how actually, with the moving environment, the continual restrictions, the changing of those operational conditions, how we can survive this. But you know, we do have great businesses here. We have a long tradition in the UK for having fantastic pubs and phenomenal brewers. So they've survived many challenges in the past, including Spanish flu, and hopefully they will use some of that resilience and that experience to navigate their way through this as well.
Philip mentioned some issues with supply chains at various times as well, and I'm interested in your comments on how that's impacted, particularly on the brewing end of your business, because obviously equipment perhaps is imported, supplies are imported, and then there's export as well. How has that affected that particular part of the sector?
Yeah, no, it's definitely impacted us. And we've been trying to say this very loudly, that it's not just the doors of the pub that you close, it's everybody in that supply chain that is impacted. And for our brewers, that then goes down to our farmers who are growing, you know, the malt and our barley that we need to produce our great beer. And so everybody's impacted on that. We do also have a short life, shelf life product, and that is another pressure that's on us at this moment in time as well, is making sure that we can remove that. Of course, we had to destroy 70 million pints in this process, which is heartbreaking, and we certainly don't want to be in that position again. So there's an issue again, not only with the supply chain, but also on the volumes that we produce. And so there is unpredictability now in there for our brewers, but then pass down that supply chain as well. And then, of course, we have Brexit, and there will be other supply chain issues that come in and around Brexit and that exchange, and where we see ourselves in terms of that supply chain.
Well, you've picked up there on Brexit, so let's pick that point a moment further. In a broad sense, do you think the sector, it's difficult to say with COVID, of course, and other circumstances and Brexit negotiations and so on. In a broad sense, though, do you think your sector is or has some sense of what that future is going to be, even if they're not certain of the details?
I think that we have been preparing ourselves as a sector in the midst of this crisis, but also for what is coming down the road with Brexit. We have an enormously resilient market, domestic market for beer in the United Kingdom, which I have to say probably won't be as heavily impacted as other people. But there is an issue about getting product out as well as getting product in for many of my members as well. And so we do want to see that there is an easing of that throughout that process. But I have been advising them, you know, if you need to get product in, get it in ahead of the deadline, and think about the impact that it will have. Particularly for us, it also has an impact in terms of the number of people in skilled areas and migrants that we can actually employ. So there's an immigration issue there that I think is going to have an impact for us as well, because we always have an issue in getting the right skills, particularly for the back of house. And so making sure that that actually is something that we do not have an extra disruption to at that point in time.
Thank you. Interesting comments there, Philip. Just to come back to you on a particular point, you talked about perhaps the resilience of the sector and the managing of supply chains and so on. Emma raised an interesting point about financial issues. You've talked about, particularly in the UK, government taking some steps towards infrastructure spending and so on. Do you think the sector is on a reasonably firm financial setting?
Yes, I do. So long as the manufacturing end can keep working and the subcontract end can keep doing what it does and working for its main contractors, be they tier 1, 2 or 3. Obviously, we are concerned with the current guidelines coming into different parts of the UK under tier 1, 2 and 3. Sorry, when I talked about tier 1, I meant tier 1 construction companies, not tier 1 COVID areas. I think the opportunities are still very high. I think we must be very, very sensible about how we continue our work. We must listen to government advice on public health guidelines. If there is a massive spike somewhere, we must do the right thing. But I don't think that we're heading for another nationwide lockdown. If we did, I think we'd have a struggle as an industry, getting back up and running. But having said that, even in the last major lockdown, construction didn't really stop. What stopped construction was the supply chains not being able to reopen their factories safely and produce.
Taking the point, sorry to interrupt you. Taking the point just a little bit further, this is GTR after all. Do you feel that governments generally, the UK government in particular, even with Brexit, but looking perhaps more globally even, that the opportunities for global trade and export still remain open, that the finance is there for organizations such as yourself and your supply chain and even your buyers as well?
Yes, I believe we're all recalibrating at the same sort of level globally. Therefore, we'll rise in a calibrated way globally through it. Yes, the finance is there. The UK government's use of UK export finance is very much up and running, and signing deals as we speak. The London markets are making small flotations, I believe, particularly on AIM at the moment. The mining sector is about to go into a super cycle anyway. There's a lot of new technology that has been forced forward almost by COVID, where people are feeling a lot more confident about investing in new and renewables. And of course, that means more raw materials, more expenditure. I think there's always going to be finance available for the right investment. And I know that Emma's sector is very difficult when you've got mortgages and landlords and various other things going on. But if you're in the manufacturing sector and you've got an idea, I see our government supporting us tremendously in that area. And I also think it's the same of most other countries. So there is the question is sort of what's going to happen. I think I hope globally we're all in this together and we'll rise at a similar level. Everybody knows what needs to be done. I have every confidence it will happen. Most recessions take 3 or 4 years to get out of. This might take a little bit longer, but I don't see dipping now. I just see a nice, steady, solid growth.
Emma, just turning to that particular point, do you think particularly your brewing members will see or are seeing potential support from government in terms of finance, perhaps for the export sector that I know that some have already exploited and have done for many years, for decades, in fact, but that others may yet be able to take advantage of, and perhaps across agriculture generally, but brewing and food products?
Yeah, I think we need to see more maneuvering in that area, to be honest. I think it is difficult for our brewers at this moment in time. It is such a supply and demand business. And when that is cut off, it is enormously difficult for us to do. But financially, it is something that we need more support with. They've definitely been in the background. And I think people in the hospitality supply chains have found it very, very hard throughout this whole period of crisis. I mean, they're not receiving the same support grants, for example, to sustain them through this period of time. But broader in this hospitality sector, if you think about what we're trying to pitch ourselves to the government, is if you invest in us in this period of time and sustain our business model through this period, then we will be the engine that can fire this economic recovery come the spring when all this is passed, because we know that demand does recover very fast. We saw that in the summer when we were allowed to reopen the hospitality sector with restrictions, but very safely. We saw that demand come back. So we are able to deliver 1 in 6 jobs in hospitality for the United Kingdom. And that is something that the government is more than aware of. So that investment in us now and helping us get access to finance at this point in time really should pay great dividends come the spring and come that recovery.
And in terms of export potential, do you see that, or is that perhaps a few years still in the works, so to speak?
Well, I'm definitely looking at those opportunities now, and I've been invited to become a trade advisor to the trade advisory group for agri-food, actually to look at those new trade deals, to look at those new opportunities it might have, and look further afield to where we might find alternative revenue, because that's what's really going to help us through at this moment in time, is diversifying your business, adapting your business. A lot of our brewers have had to switch to being online, e-commerce, driving those sales. Could we therefore use our beer reputation and use that to generate new income streams by developing and opening up new markets for us. I think there is enormous opportunity there, and perhaps we've actually undervalued the reputation that we have, as opposed to where the Germans are. But you know what? The Germans pay 11 times less tax than we do on beer, and we are a heavily taxed industry. And that is something that the government could do, is to reduce that tax burden, to help our businesses through this, help them into recovery. But actually what the brewing sector does in Germany is they use that domestic investment, that I would say that is, in order to springboard themselves into those opportunities. And then you see them all over the world with their reputation for beer. So I think we could do that for Britain as well.
I'm now going to turn to two more highly experienced panelists in this GTR UK Business Leaders Roundtable. And I'd like to introduce Richard Smith, who's a very experienced CFO in the defence, manufacturing and aerospace businesses, and Ian Howells, who's the Senior Vice President of Honda Motor Europe. Richard, turning to you first, how do you think those broad manufacturing and industrial sectors of the UK economy have fared during these COVID problems? We've heard already from Philip at JCB about their specific response. Perhaps you'd care to cast your eye over a more broad assessment of where you think the sector has come from and where it is now.
Thank you. Great to be here. From my side, Peter, actually, a lot of people have been talking about the kind of slowing down and certainly on the supply chain, the difficulties getting things through. The experience I've had so far, it's been quite positive. We were expecting lots of fade to come through, particularly on the export side. There has been some impacts, but it's been fairly minor at this stage during the first bit of lockdown. We're now still thinking about the second phase, and there may be a cumulative effect. But at this particular junction, it's been minimal, I would say, from a supply chain side. The biggest impact, of course, is the social distancing, and particularly the manufacturing side. It took a bit of time to recommence with all the precautions that we needed to make. But I think generally it's been okay, actually. I know there seems lots of gloom and doom in the marketplace, but the experience I've had personally, but also with my colleagues, it's been okay.
We've certainly seen some recovery in things like PMI figures and so on. Focusing perhaps just for a minute or two, or perhaps on some of the more export-oriented activities that you're talking about there in those sectors, where do you see government impact on that? Again, where's it been over the last sort of 12 months, and as we've come into COVID, where do you see it at the moment, and what's your expectation going forward on that?
I think it's a wait and see. I think there is some anxiety, and I share a lot of the questions that CBI have been raising in terms of the Brexit. There we go, talk about Brexit. This whole thing about Brexit and the COVID, the double whammy effect. And it is a little bit difficult for us to then understand some of the minutiae that we'd have to do. So some of the form filling, some of the VAT clearance issues, those kind of things. But I don't think it's going to have this massive effect that at the moment we would see lorries parked on the M20 and a blockade type of approach. We'll work through it. It's just a little bit, it feels that we're in the end of a brinkmanship that is taking place. And I think from a CBI point of view, and I recognise my colleagues would be now saying, look, enough's enough. Let's get into some of the details until we can then start planning, because that's what we do quite well.
Would you share, lastly on this point, would you share perhaps some of Philip's optimism, perhaps, that there are markets out there? He obviously is focusing on China and India, but other markets in Asia or perhaps in South America, where some of those manufacturing capabilities in aerospace, perhaps in defence sectors and so on, are areas that UK PLC has yet to fully exploit and could do more with?
I think there is. We know India is a big market, and we know that it's got Buy India, so we need to think hard about how we tackle that. There are some clearly issues on the defence side in terms of the defence side using China, but I think overall, yes, I do. And I think there is still a very positive market in Europe, despite the Brexit issues, because above all, defence and I would say aerospace is a key business and key industry throughout the developed nations.
I'll come back to you then in just a moment. Ian, if I can turn to you from the point of view of both of Honda Motor Europe, but also more broadly the automotive sector, UK, continental Europe, even global, if you like, and obviously from a Japanese perspective as well. How do you think the automotive sector has handled the COVID issue to date, and where do you see the sort of the short-term future for it?
Well, very much as a global company, we sort of followed the virus around, I guess, in terms of we have quite substantial manufacturing capability in China. So, of course, that got hit first, probably more seriously, was in terms of demand initially, and then going through into the supply chain itself. And that started to slow our own supply chain a little, not significantly, mainly because there is the logistics issues. So, of course, we tend to have quite a bit of product on ships at any point in time. That was pre-March. As we reached into March, then we started to see slowdown in Europe. And putting aside the health and safety of our own associates, which was primary in our thinking for us to suspend production, it was what seemed to be a real significant slowdown in our own supply chain in Europe that really prompted us to make the final decision, right, we'll suspend production. We just couldn't guarantee supply at that point. So that was very key to us in terms of that final decision to actually suspend production. As we've gone back, actually, what we found is that things started somewhat slowly because you needed to pretty much get your whole supply chain coming back at once. And that meant you had to work in tandem with other manufacturers in a way that it meant that actually, yes, as a tier one supplier in particular, I can get my own supply chain back up, and it's worth my while getting people back into the factories and start production again. And very much that's where we started to see some minor difficulties in terms of that. So what we ended up doing, going back to the Brexit word again, is we did start to use some of our buffers that we'd built up for Brexit in actually the restart for COVID. And we're now obviously in that position where we're rebuilding some of those buffers, but nevertheless, that's what we were initially faced with. In terms of suppliers themselves, we had a lot of concern, particularly with our tier 2, tier 3 suppliers, in terms of their capability of seeing their way through the COVID crisis, particularly in terms of liquidity being the primary one amongst that. And certainly we've seen some reflection of that in terms of increasingly suppliers have actually looked at supplier financing with us, which was something that before we did start this engagement a number of years ago, actually coming out of the 2009 credit crisis. Very little interest at that point, but certainly coming out of COVID, we've certainly seen that liquidity crunch in the smaller elements of our supply chain, and therefore they've very much more engaged with, as I said, the supplier financing arrangements we have in place. So it's a bit of a mix, all in all, in terms of the supply chain. I guess at the moment, really, actually, the key thing for us is demand. We really do need to see demand coming back in a bigger way. Again, a bit of a mixed picture globally. Of course, in Europe, we pretty much went from full outlet activity to virtually zero. We had a few outlets in Germany, Poland still going, but broadly speaking, in terms of cars in particular, the dealerships just closed, and demand went with that. Quite clear, our customers had not moved to the web in terms of their buying of cars. They still very much needed to go and see the car, touch, feel, and give it a drive. So that acceleration, which we've perhaps seen, or that indication we'd probably see that customers would move to web and web settlements of a transaction, still a little way to go in terms of cars. Different story in terms of some of our other product lines, though. So motorbikes and the likes of lawnmowers, marine engines, those type of things. Very different complexion in terms of that. And actually, on those, that's probably where the supply chain is the stickiest, particularly if you're taking stuff out of the US. Certainly, we found that the restart there has been fragmented, more so than Europe. Europe seemed to come back pretty confidently and together. But the US, certainly from our experience anyway, has been a little bit more fragmented in the way it's come back. And therefore, our supply of some componentry from the US and certainly some finished product has been patchy.
Well, that's a very comprehensive view, but perhaps if we could narrow the focus slightly from a UK perspective. I know there have been some changes in the offing, but also in continental Europe as well, particularly in terms of some aspects of manufacturing. What's the story there, and where do you see those changes taking you in the next year or two?
Well, certainly in terms of manufacturing, it came back pretty much as we wanted it to. The factory, which we have primarily in Swindon for automotives, is running, in the late 90s in terms of efficiency and efficacy. So we haven't had any real concerns around that. Likewise, we produce lawnmowers in France. No big issues there either. Bikes in Italy, again, we really haven't had much problem in terms of the actual manufacturing capability. As long as the supply chain has been there, we've been fine. Obviously, looking a little bit forward, as you're probably aware, we did announce that we were closing our manufacturing in the UK, and that will run through until, will cease in July 2021. So I guess our planning horizon is very much shorter, as it would be for many people. But nevertheless, with those 6 months in mind, we're very conscious with Brexit and been in planning for a long time around that. But it's that bit of a combination of Brexit and COVID. It's putting a lot of strain on the organisation, as we're in a position where we have to plan and replan with, at the end of the day, quite often limited resources, because this is, quite technical stuff, particularly if you're dealing with new customs arrangements and the like.
More broadly, perhaps, do you think that manufacturing industry, not just in the UK, but perhaps across continental Europe, has been well supported by government action through COVID, or and where do you think that support, particularly in terms of things like export and trade finance, will be over the next 1, 2, 3, 4 years? Is there a competition for resources actually from government?
Well, I think potentially, probably where we're going with that is that as we move to electrification, particularly of automotives, we are going to see exactly that competition. So it will be interesting to see how that bit develops. But nevertheless, in terms of manufacturing as it stood before, pre and post COVID, then broadly the initiatives that government's put in terms of furlough schemes, they didn't all use the same terminology, but basically they were the same. That's helped us significantly in terms of bridging that gap between complete closure and then bringing the supply chain back up. I think it's helped our supply chain probably more over than it did us in terms of their capability of having sufficient working capital to bring back the supply chain. In terms of finance, I have to say it's not something we use hugely in terms of Honda. So my experience in that one is a bit more limited. Like I said, supply chain financing we're seeing much more of. So I'm sort of assuming, and I do hear basically good things about the UK side of that, that generally speaking, that seems to be working effectively, and that ability to export is adequately supported in that respect.
Richard, picking up that point with you, would you agree with that sentiment that perhaps that export finance support is there and will continue, but also perhaps maybe weave in the theme that Ian sort of slightly picked up on there is this going to be a series of winners and losers in terms of manufacturing capabilities and capacities, both in the UK but also across Europe?
So I think I agree with a lot of what Ian said. I think the first foremost, the point that you raise, has the government been proactive in supporting manufacturing and industry generally during COVID? I think it has. And the difficulty is the second wave, how much do we then continue to support the industries, and you see the big debate taking place in Manchester with Andy Burnham. The difficulty is once you provide these furlough schemes and support schemes, at what stage do you then pull away, particularly if you get second and third wave issues? I think that's a big issue from the government point of view at the moment. But I think the initial bit, which was the shock that we had in March, I think the government came in really very strong, and Sunak, I felt, was a very strong chancellor, recognised the fragility of what this would create for the UK from both the service sector but also the manufacturing sector. And I know a lot of the focus in the press has been on the hospitality and the service side, but I think actually the government has been really strong to support the manufacturing side up and down the Midlands, in terms of the Northwest in particular. So I think big tick in the box for the government side for doing what they've done. I think coming back to the second part of the question in terms of the export side, well, clearly, I think the government is working really hard. It knows once it's sorted out the Brexit arrangements, it needs to really ensure that we've got the exporting side slightly weakened because of COVID. So I think, to your point, is the government going to be stepping up? Yes, I do. I think they've put into place a number of initiatives with the banks and the bank guarantees. From my side, I'm waiting for the details, but I do think they will step up to help on the export side.
Would you say that UK PLC was adequately prepared in terms of sort of capital balance sheets? I mean, we hear a lot about zombie companies, for example, and with the QE having driven interest rates down low is keeping some companies alive. Where do you stand on the sort of the survival of the stronger, if not the strongest?
So to me, so I think
Yeah.
I think it's right. I mean, we've had the dividends have been held back, so there's a whole heap of stuff in terms of the stock price and the share market and the expectations from these large companies. But I think it's like all things. There will be the winners and losers, to your point that you raised before. Those businesses which are able to adapt quite quickly to get up their tier 2, tier 3 supply chains, to assist, as Ian was talking about, in terms of funding and financing, and that whole planning process. I think, yes, there will be the winners and losers, and like all these things, it's an evolving process, and it will be a change in landscape. What we don't want, of course, is a too dramatic change, because change is what we do in business, and we manage those changes. The double whammy of COVID and Brexit, is a difficult one. But I think at this stage, the government have been more than proactive. And in fact, I would almost say that it's been too proactive in lots of ways. It just needs to pull back a wee bit and allow industry just to gather itself and look for a way forward.
Would you say that would be reasonably replicated across continental Europe and the competitors that UK PLC has, but also in terms of UK PLC's own investment in manufacturing capabilities in Europe and wider?
So from my side, I've had lots of dealings, certainly on the Italian side. I think has more European experience than I have, but certainly on the Italian side, and I've spoken to my colleagues recently in a previous role I took. They've got lots of support, both regional and national, in Italy. So I think they're doing quite a lot of that paternal protection of their industries, particularly in the north side, for the northern Italian backbone of their economy. So I would say that the Italians, for my example, and my experience, have been a little bit stronger than perhaps the Europeans generally, but certainly more than the UK side.
Ian, coming back to you briefly as we come towards the end, something you mentioned earlier on, of course, is that as a consumer-led organisation, you are looking for a consumer recovery. With the best will in the world and a fair wind, what's a reasonable expectation, do you think, touch wood, that we might get? Are you looking at sort of early 2021 or later 2021 or perhaps even 2022?
Well, I think certainly in some areas of the marketplace, and sort of very broadly, I mentioned them earlier. So we're cars, bikes, and we're lawnmowers and the like. If I look at the lawnmowers and the bikes, actually, the recovery is almost there. We're not going to be that far off our our numbers from last year, surprisingly, in terms of volume and the like. So actually, some of that recovery's come back. A number of issues come into that. I think people during lockdown have looked out and decided they need to do something in the garden. And likewise, the government's saying, well, keep off public transport. Well, the logical place people have gone is to small motorbikes and those type of things. So in that respect, that demand has stayed. Where we've really suffered is on the car side. Obviously, a much bigger acquisition. Confidence isn't always there. Is my job still going to be around? Have I got the right finance, etc.? So that one is going to be a slower recovery. And I would certainly say we're probably 2 to 3 years off getting back to where we started from pre-COVID. I've heard other estimates that could suggest it might be longer, but yeah, the market has really gone down 5% or so very sharp adjustment.
And would you see, and I'll ask Richard you this question in a moment as well, but would you see initially, Ian, is this a catalyst perhaps for innovation, both in manufacturing, but also across the whole aspect of consumer business? Perhaps we're looking at consolidation in manufacturing, consolidation of brands. Is this really the catalyst for that to happen?
I think what we're probably seeing, moreover, is an acceleration. I don't know necessarily it's starting new trends or new momentums. I think very much it's accelerating what was already there. I mentioned about consumers going online, for example. We've seen a little bit of that, perhaps not as much as we might have expected. Manufacturing, of course, there's been some quite dramatic consolidation amongst the automotive OEMs over the past year or so. Will that continue? Well, the pool is getting smaller, but we'll wait to see. But I think we have seen some manufacturers just take that step backward and say, do I still want to be in the marketplace? Is it something that actually I can still be profitable on? And we've seen some OEMs, particularly in Europe, actually just quietly withdraw from the market and say, we're not going to bring anything new in, because really, from a profitability point of view, and obviously compliance as well with all the legislation, it's just the market just is not going to be good enough for us for a period of time. Therefore, we're going to, well, not so much pull out the market, but perhaps just retreat backwards from it for a while.
And Richard, perhaps closing with you, do you see this as an opportunity for UK PLC to consolidate, perhaps, or to innovate, even either in terms of manufacturing process, in terms of sustainability, in a variety of areas? Do you think, perhaps I'm being a bit, I'm leading the witness here slightly. Do you think we're up to the job of doing it?
For sure. So look, the point is, and it was a bit of a leading question. Yes, surely, we're a great nation to innovate, and we've got some really good products coming through, new products coming through. We've even got, look at if you look at the post office and the postal service, it's now adapting to competition in terms of the online parcel process. You know, we are an innovative nation. We are moving towards a different way of operating, whether it be on the internet. We've just talked about with Ian in terms of the way things are going. You know, there's a boom time in Amazon, there's a boom time in some of the other products. So it's a switch to the point about, you know, is it a change? I think it is a change. I think one of the kind of key things for me is the working life. We've talked about people working from home. I think one of the key areas will be how much we are going to make that a permanent feature. If that's a permanent feature, and I know it's been a very concern about big cities like London, et cetera, if you don't get the footfall of people traveling to the offices, what do we do? Well, those people are working from home. Those people still need their sandwiches, still need their coffees. They still need to be working and living in their own areas. So it's a switch. Coming back to my earlier point, what you don't want is a switch to be dramatic. You want the switch to be a slow burn. And I think what's happened is COVID and Brexit is forcing the pace, and we just need to be careful. And that's why I think Sunak was right in terms of the government to go and help and support during the COVID issues. And I think as we then move into the Brexit and we get tier or the level 2 COVID adjustments and wave, what is it that we're doing? So we just got to be careful about that change. It's got to be a pace that we can cope with and we can adapt. But yeah, we will adapt, and we can see already some really positive things that are coming through because of the change in work processes and the work balance life issues that we talked about.
Thank you very much, gentlemen, for those answers. I'm going to close with one question. It's not really a particular focus necessarily, but I just would like your views on it. There's been a lot of talk, obviously, about environment, sustainability, and governance, ESG, as we call it. Without going into too much detail, are you confident that that is not going to be a bar to sort of post-COVID recovery, or it's just another adaptability that we're going to have to show in the way we do business? Richard first, perhaps.
Yeah, I think it's another one of those hurdles that we will jump. I know Ian said, at some stage the hurdles become too tiring and you give up. And I think it's a very valid point that he raises. But no, I don't see it as a complete showstopper.
Right. And Ian, what's your view on that?
I think there's a great opportunity running alongside that. We need the infrastructure that's going to support some of this environmental stuff. And certainly as a business, we do see the UK as, from as far as energy goes and the environmental goes, as a good place to start investing. And that's something that we are doing currently. So it is an area that the UK, if it, as it were, plays its cards correctly, could have a competitive advantage going forward.
Thank you, Ian, and thank you, Richard. And of course, my thanks to Emma and to Philip. Well, that brings us to the end of this GTR UK Business Leaders Roundtable, and I hope you've enjoyed the views that our panelists have expressed, and that you go on and enjoy the rest of the conference brought to you by GTR. Thank you very much. Goodbye.